Hey everyone, welcome back to Investing Ethos. And in this video, we're going to be looking at Cluey's evaluation. So please keep in mind, in this video, I'm going to be using my own valuation matrix to measure the uncertainty and make a portfolio decision. But also keep in mind that this is general advice. This is not personal financial advice. What personal financial advice is considering your objectives, financial situations, or needs. And in this video, I'm not doing that. And if you require personal financial advice, you should consult a personal financial advisor. I'm not a licensed personal financial advisor, so please keep in mind that this information is general in nature and it's based on my assumptions. But in saying that, let's look at Cluey and look at what we know. So for a quick recap, if you haven't seen the previous video on the valuation of Cluey, I recommend you watch that before you watch this. And in that video, I talked about my base case valuation. And in my base case valuation, I'm assuming $100 million in 5 years' time for Cluey in revenues, which is corresponding to a 45% CAGR with 100,000 students on the platform. And I feel Cluey can definitely, I can't say definitely, I feel Cluey has a strong chance in achieving this. And that's what my valuation is assuming. And also, I'm assuming that the reinvestment of using a sales to cap is 2. What that means is for every dollar spent on reinvestments, you would generate $2 in revenue. The reason why you would go for a sales cap higher than 1 is because technology businesses in nature is very global, and you can have much more outreach with less amount of capital invested because you don't need to have as much resources to attract more customers, because technology in itself have this thing called network effects that allow you to expand and grow really quickly. And nowadays you can definitely start up a business using Facebook, for instance, as a platform to sell shoes, and you can grow your revenues really quickly because if you manage to get into a particular niche and you grow selling whatever product you're trying to sell, and because the amount of customers there in Facebook are so much more larger than if you were to go and set up a shop, the sales to cap ratio of you launching an online footwear is much more higher than if you were to set up a traditional brick and mortar, because you need to have brand recognition and customer obsession and repeat customers. Same can be said for a tutoring business like Cluey. And Cluey in itself is not just for tutoring, but they're a tutoring platform. And with the tutoring platform, you can reach you can offer tutoring sessions online, and that is a very flexible business model. And if there is a case of another shutdown in the market where students no longer can go to school to learn, they have to rely on sources like online tutoring like Cluey and Chegg in America, but in Australia, Cluey and other tutoring sources have to go online as well. So sales to cap of 2 I feel makes sense. I'm not really going above and beyond. And also operating margins of 15% is quite a brave assumption, because what I'm really saying is that long-term Cluey can maintain their growth and maintain their margins. So in the face of competition from other tutoring companies like Matrix and Talent 100 and all the other tutoring companies that are out there, either small or big or franchises, and like even Kip McGrath as well, I feel Cluey can win customers and maintain a healthy margin of 15%. So that in itself is a big assumption that I'm making, and corresponding to $100 million in revenue. Already I'm really stretching my assumptions right there, but I'm going to back it, and I feel it's a fair assumption to make at this stage. Perpetual growth rate, again, is quite a brave assumption of 4%, which means if Cluey were to grow forever, I feel like it's going to grow slightly higher than GDP. And I think it's not a bad assumption to make, because Cluey is such an early stage company, and also the fact that long-term education is a key priority for any government. And since education is going to go digital anyway, Cluey will be standing to benefit, because they're at this stage a purely online service, and by providing that online service, they have very high flexibility, and by developing the platform and making it personalized, a lot of parents will switch to Cluey, and that's really the investment case for Cluey. So tying everything together, it gives me a $185 million valuation, or $2.25 per share. The share price as of 14th of May was $1, so my valuation is much higher than what the current market value is thinking. So already we have to make a bit of a decision on whether or not I believe my valuation, or is the market seeing something that I'm not seeing. Either option is true. But keep in mind, before I made this assumption, I didn't really consider the catalysts, and there are three really main catalysts involved for Cluey that can increase the valuation, which is the network effects. I have not estimated how strong a network effect Cluey has, because Cluey at the moment has around 13,000 customers that are using it, using the platform at this stage, and they have proven in a quarter-on-quarter reports that they're driving down marketing customer acquisition costs, or CAC. And the reason why it's really important to measure this is we want to see how strong a network effect Cluey has. If Cluey has a weak network effect, it means that they need to rely on more marketing and more sales as a form of an expense to get that customer. However, if they need to rely less on sales and marketing because the customers are referring to other customers, future customers, so in the customer in this case are parents, referring to other parents to get their son or daughter into to use Cluey for their education, that drives down customer acquisition costs greatly for Cluey. That is one less customer for Cluey to spend marketing on. And that is a network effect that we need to monitor. Another network effect we need to monitor is revenue growth from new students, because new students come from existing students. So existing students recommend to future students that this platform is good or not. And however fast that growth happens, if it outpaces fluctuations in student enrollments, Cluey can definitely benefit, because every year in the first quarter of the calendar year, Cluey faces a downturn in enrollments, because the main reason is that school is shut down during the summer periods in Australia, because summer holidays, come on, like, do you want to do tutoring on a summer holidays? But in saying that, when you have these fluctuations, your student enrollment still needs to be strong enough so that it doesn't really dent the revenue growth, and it picks up after when session resumes and when the new term begins. And that in itself is a key catalyst to watch, to see if they're growing year on year, because that's a good way of scoping how quickly Cluey is growing. And finally, the last one, and I think this is the one that a lot of analysts are not using and are not really paying attention, is monetizing the student data sets. So Cluey is recording the student sessions when a student goes and does a maths tutoring session. The reason why it's really useful for Cluey is to see how well the tutors are tutoring and how well the students are learning. And it's great for parents to see how well their kid is learning, as well as it's great for the tutors to see where the kid is really excelling in terms of their understanding of a particular subject, but and also their weaknesses and how they're teaching as well. And in itself, it's a really powerful data set, and Cluey can definitely monetize that depending on who it is for. So charging more for parents to get personalized feedback on their son's son or daughter's education. And I think parents have proven that they're willing to spend more for their kids' education, and that in itself is a monetization aspect that Cluey can pursue. We do not know how that'll all pan out, but that is definitely a catalyst to keep in mind, because they're using artificial intelligence. Right now, the artificial intelligence is for improving the learning, but if they can also monetize that, that in itself is a really powerful data engine for Cluey. So when you're considering the valuation metrics, you got to go and check out Infinity War and look at Doctor Strange. And when he is in Titan and the Avengers need to face up to Thanos, Doctor Strange had to go through many scenarios to see where the Avengers will come out on top. And I mean, you can watch this video right now.
Percent you. Your math is blowing my mind.
Excuse me?
Does your friend often do that?
Strange, we all right? Be back, Jeremy.
Hey, what was that?
Went forward in time to view alternate futures, to see all the possible outcomes of the coming conflict.
How many did you see?
14,605,000.
How many did we win?
One.
And yeah, and after watching that, you can have a look and see this matrix, and you get an idea of why I'm doing it. There are many outcomes for Cluey. We do not know. We are not Doctor Strange. If we know the outcome, then we for sure know if a current share price of $1 right now for Cluey is a buy or a sell. Because we do not know the future, we have to lay out some potential outcomes. And the two outcomes that I'm measuring is the risk in the form of final cost of capital and the return in the form of revenue growth. So there are various options that are out there for revenue growth. A 20% revenue growth 5 years time means I'm assuming Cluey will get to $50 million in revenues, which is half of 45% revenue growth, which is our base assumption of $100 million in 5 years time. And then there's the 60% revenue growth, which is assuming way more. So there's a whole bunch of optionality with the revenue growth. If you believe whatever scenario the Cluey can hit long term, and then on the left hand side, on the columns, on the rows, you can see that the risk changes from 6% to 10%. So what you're really saying here is that Cluey can be a very risky investment, so you require a higher rate of return of 10%, or it can be a less risky investment and you require less required rate of return of 6%. If you can look at it from a valuation perspective, the current valuation of Cluey at this stage you feel is undervalued because there is less reds than greens, which means the current price of $1 is undervalued at this stage by the market, and that's the general assumption that I feel at this stage as well. And my assumption is highlighted in yellow of an 8% risk long term or a required rate of 8% long term for a 45% revenue growth gives me $2.25 or $185 million market cap, which is much higher than the current valuation of $1.01. So these are the outcomes I see, and that's what Doctor Strange would kind of do and see the whole outcomes before making a decision. And I do not know the outcome. So Doctor Strange knew, but I do not know, and we do not know. But this is what I laid out. And from my understanding, I feel Cluey is undervalued, but I would like to have your perspective on this, if you feel the same or not. And what I'm doing at this stage is assuming that if it was true, what would be an annualized rate of return? And using $2.25 as a five-year price target, an annualized rate of return would be 17%, which I think is quite decent, quite reasonable. So that is an absolute return of 122%, which I think is quite nice. But if you're a super bull, you believe that Cluey is worth way more than that. So a revenue growth of 55% and a risk of 6.5%, you're assuming a $6.13 5-year price target, which is an annualized return of 43%, which is fantastic. I wish I could get that. And an absolute return of 507%, which means Cluey is worth 5 times more than what it's worth right now. Then this is definitely extremely undervalued for you. But I do not know the future outcomes. I'm just laying it out there. But if it were true, that's what the market is assumed. When you're making this valuation matrix, you're trying to put your uncertainties out there because we do not know what the future is. I'm going with my base case, and I feel my base case is quite conservative. Remember, this is not personal financial advice. I'm not considering your personal financial goals or needs. So we do, in this channel, include Cluey to the portfolio. I am happy to include it. I was very hesitant, and in my previous video I said that I would not include Cluey in the portfolio because of the high cash burn, but I did not consider the latest quarterly financials that came out in that before that video came out, and in it we saw that Cluey has $30 million in cash, and they're burning about $3 million a quarter, so they have about 10 quarters worth of capital to turn from an operationally negative company to an operational positive company. And I feel Cluey, and considering all the valuation outcomes there are, I feel the market is undervaluing this company, so we decided to include it. So it's only a 10% play for me, 1,000 shares, which is just $1,020 position into Cluey. As you can see, that Janison has made a decent return for us. The portfolio rating before was 10%, where we put $1,000 into Janison, and now it's 1,905 because it did really well. We have made it like a 90% return, so please see the previous video to see how our portfolio is going. And what's really important when we add a company to our portfolio is to really reassess it. And every quarter, we're going to have to reassess both businesses, both Cluey and Janison, and also really track how they're going. And long term, I believe Cluey can hit their targets, so I'm happy to include them in the portfolio. So in summary, please note that this is not personal financial advice. I'm just making my own assumptions based on my own perspective, and I'm not considering your objectives, financial situations, or need when I'm making that. So this is not personal financial advice. And if you require personal financial advice, I recommend talking to a personal financial advisor who is licensed. I'm not licensed, so please keep that in mind. But in saying that, hope you guys found some new information with the valuation matrix and seeing what Cluey could be worth, and hope to hear what your feedback is, if you believe Cluey is undervalued or not, in the comments below. So hope you guys enjoyed this video. Please leave a like, subscribe, and look forward to seeing you in future videos. Thank you very much.